Thank you. Thank you, Mr. Chairman, for holding this very important hearing. Thank you to our witnesses for joining us today. I look forward to an engaging discussion. The development of new technologies and changing consumer behavior have resulted in drastic changes to our payments systems. Frictions previously associated with the transfer of funds from person to person or business to business have eased significantly. As the landscape continues to shift, central banks are exploring the digitization of their currencies. There are many potential benefits associated with the development of central bank digital currencies, including easing transactions and reaching previously underserved populations. However, we must also be mindful of the potential negative national security implications, including CBDC's use in financing illicit activities or evading sanctions, and the long-term consequences if we lose our competitive edge to countries like the People's Republic of China. According to recent data published by the Atlantic Council, since 2014, dozens of central banks have begun exploring CBDCs. 32 countries are in the research stage, and 35 have either launched a CBDC, conducted a pilot, or are in development. In the United States, as the chairman noted, the Federal Reserve Chair Powell has indicated that the Fed is closely examining the concept of a digital dollar and plans to release a white paper on the subject in coming months. One area of potential promise of a U.S. digital dollar is expanding financial access and inclusion for unbanked individuals. A recent FDIC survey found that roughly 14 million American adults did not have a bank account. It is possible that lower system costs and digital wallets tied to CBDCs may provide access to underserved populations. Meanwhile, China is pressing ahead in its development of a CBDC and has already launched pilot programs of its digital renminbi with major retailers in select metropolitan areas. In 2016, then People's Bank of China Governor Zhao Xiaoshuan stated that his ambition was to eventually replace cash in China with its digital renminbi. Beneficial to the CCP is the fact that a widespread adoption of a digital currency would allow them to track every purchase, expand domestic surveillance initiatives, and exert greater control over private transactions. The CCP may even use its newfound visibility into transactions as a tool to enforce party discipline. China has made clear their motives to challenge the United States as the preeminent global economic power. The development and implementation of a digital currency is one of several steps in their quest as they seek to usurp the dollar as the world's reserve currency. As policymakers focused on national security implications of financial services, we must closely monitor China's actions and appropriately react to these developments. While it is imperative that the United States not cede its competitive advantage, we must not rush the process for the sake of simply keeping up. With the development of this importance, magnitude, and potential long-term impact, we must realize that getting it right is more important than getting it done fast. In this regard, I agree with Chairman Powell, who last year stated, quote, "It is more important to get it right than to be first, and getting it right means that we not only look at the potential benefits of a CBDC, but also the potential risks." We must also carefully deliberate the appropriate role of the Fed in issuing a CBDC. Should it approach the program alone, going directly to consumers and taking on the roles and responsibilities traditionally held by private institutions, such as customer service, transaction verification, and AML KYC compliance? Or should the Fed approach the issue in coordination and partnership with the private sector? I hope our hearing today will help inform our thinking as we weigh the benefits and potential costs of CBDCs, specifically in the context of U.S. national security and the appropriate role of the Fed. I yield back.